Welcome one and all to the Traders Market Intelligence Report brought to you by WealthBuildersHQ.com. This update is for the week of Monday, February 27, 2023. Let's go ahead and dive right in. This is kind of a two-sided conversation. This is the Fed sitting there saying, should we raise rates? We shouldn't raise rates. We're going too high. We're not going high enough. It's all over the place, depending on the Fed that you listen to. Some want to ram it down your throat. Some are unsure. Some say we should cut rates sooner than we do. It's crazy what's going on out there with the opinions, not only of the Fed, but of individuals that are meant to be experts telling us what we should be looking at and what we should be looking to do, right? To me, it all comes down to what does the chart tell us? What do the numbers show, right? The numbers show right now when we look at the charts and we look at the VIX, fear took a major spike early in the week and had a bit of a pullback from there. I think part of it was an overreaction. Go figure. Numbers that were not accurate. Gee, did that ever happen before? Right? If we go and look at the S&P 500, let's go bring up SPX. We go look at the S&P 500. Guys, we're getting a lot closer to getting back in that downtrend. Right? There's the overall downtrend on the daily chart. Right? If we bring it back in, zoom, 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 we had this week, it happened on Wednesday into Thursday. We had the 8 cross down below the 21. What is that telling us? More bearishness kicking in. It was one thing to be down below the 55. We had closed below. We got back up for a day, but it didn't matter. Friday, we crashed. Big gap to the downside. We tried to win. We tried to fight. We, the bulls, tried to fight. They could not sustain. They couldn't make it happen and failed right from there. All right, so where are we at now? We are in a bearish bias, not true bear, but the 8 is no longer the highest moving average. What that tells me is that I am more open to taking a directional bearish opportunity if the right one presents itself. So when I look at this, where am I looking at now as my next targets, and what am I looking at as potentials for where we go from here? Well, the very first thing is pretty straightforward, right? 39, 29, 11, that is our 618. That is a major support level. And we already violated the 50 on Friday. We gapped right through it, retested it, and we failed right off of there. That 39, 29 level is a critical level of support. If we violate that level, we have broken the first vestige of help for the market to bounce from there. Now, does that mean that we're going to crash if we break that? No. It's just, you've got to look at the market in segments. You cannot look at this big picture and say, oh yeah, we're going up. How do you figure that? Well, it just looks, we got to look at we don't gotta. That's the Brooklynese coming out. I apologize for that. For somebody like, yeah, use the Brooklynese. No. For me, it's not gotta, it's we need to, right? We need to look at every single level on the chart and determine what's happening. I'm not looking down here saying, oh, we're going to violate this level. We might, but not today, right? I'm worried about or looking at my next thought process is the 618. If we can break through the 618, even if we can chip away at the ice, you see we did that on Wednesday and Thursday, right? Wednesday, small. We had a very small break in the ice. We broke the 50, just barely pierced through. Thursday, we came through much further, which gave way to say, yep, you can go further down now. We kind of cleared the path. Just punch it one time and it'll go. We gapped right through it, retested and failed off it a little bit. We still closed on a bullish candle, but down 42 points on the day from when we closed the previous day. So 39.29 is the first one. 38.66 if we get down there. Notice we have the confluence of the downtrend line with that 38.66 level. That's another important level in there. At that point, okay? If we go and look at a weekly chart on the S&P, there we go. Here, actually, let me go back over here, and I need to fix this fib and make it only where it is on this chart. Right now, it's showing up on my weekly, which means it'll also show up on the monthly, and I don't want that. So let's see. I know it's on here. There we go, showing all windows. We don't want it in all windows. I only wanted the one that I drew it on. And now we go back to a weekly chart. Okay, there we go. It's a more better, right? So we still have a lot of bullishness in the market, meaning we're up higher than our downtrend was. But the bearishness 3 weeks in a row, 3 candles in a row has set in. We look at the monthly, and again, it takes longer to get there, right? But we look at the monthly chart and we've gone flat on the monthly. We've had an up, a down, an up, and now a down month on that bigger picture, more investor style. We go back to our daily chart. It's pretty clear that the bears are in control at this point. Doesn't mean we're not going back up. Listen, if we go up, what are we looking for? Get above the 39, 79, 66 level. That's first step. But realistically, I need it above all moving averages. That, to me, puts us back in bullish territory, and now I'm ready to consider looking at bullish positions. But Rob, you're not giving me a direction. Is it going up or down? Yes, and maybe sideways too. I'm not here to give you a direction. I'm here to give you points of where if we move in that direction, we have targets of where it goes. You reevaluate. If we move up above the 50% line, we will reevaluate. If we get above the 55, we'll reevaluate. What will the evaluation be? Well, we've got a fib line and two moving averages right there, so I need to get above those. Right? We evaluate at every single level. Don't look at this. Remember, I am not an investor. I am not here to tell you for the next 2 years, 5 years, 10 years, the Warren Buffett model, that you should buy XYZ stock and hold it for that long. That's not what I'm doing here. Are there going to be points where you may choose to do that? Yes. I am talking about trading the market. I am talking about short term. For right now, most of it is going to be intraday, maybe a week, couple of weeks if you are looking at a swing trade that you're considering. For me, which I will not right now at this point. They're just not working for us, at least not what we do in power option plays. But here, we look at where the market is intended to go next. Not forever, not for long term. Where's the next place? 50 percentile on the upside, 0.618 on the downside. Those are the key levels. All right, there you have it, ladies and gentlemen. Make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. Make sure you go and check out our tradinglikeaboss.com website. Get registered for Monday's Power Hour and then Friday's Trading Coaches Playbook. All right, everybody, take care. I will see you all in the next one. Bye for now.